you spent nearly your entire career in the aerospace industry. You've worked at Pratt & Whitney. You were the CFO of Bombardier between 2015 and 2020. That was quite an interesting period. I would have a lot of questions about that.
Yes.
But we're here to talk about Air Canada, where you've been CFO since 2023. 5 years after the pandemic, how would you describe the state of the airline industry today, and what are the key consumer trends you're seeing right now with the post-COVID era?
Yeah, good morning everybody, and Mathiew, nice to be here with you today to talk about Air Canada. I think that 5 years later, it's starting to be far in the rearview mirror, the pandemic, and I would say that the industry has taken some time to recover. Today, people love to travel, and they've traded. I'd say they traded travel up their discretionary spending. A lot more attraction to premium travel as well. So that's folks that want to go through lounges or inside the cabin upgrade as well. And the other thing that we're seeing that is kind of happening over the last couple of years, and it's a trend that's starting to be a little bit more pronounced, is particularly North American travelers extending their travel season outside of the peak summer period. So we're seeing travelers going to Europe, where they would typically go in August or July, into September, October, and even early parts of November. So by and large, I would say that the industry is starting to really gain traction. There's been some challenges over the early parts of the recovery with the availability of aircraft, and some cost pressures as well with the inflation that everybody has kind of experienced. But travel and people's habits with travel continue to be, I'd say, higher priority.
During your Investor Day, I think it was last year, you showed out the layout of an aircraft. The aircraft pretty much of the future at Air Canada. So if I'm going into an airplane, let's say in 10 years, what's the layout look like? What key differences are we seeing there?
Well, I would say that, cabins typically are being upgraded. They used to be every 10 to 12 years. Now we're seeing 7 to 10 year cycles. The entertainment systems, mood lighting. We work on making the experience as well. Airframers with cabin pressure and how the aircraft and how you feel once you leave the aircraft. With respect to premium cabin, there is going to be a trend towards more premium economy and as well as business class seating. I think for Air Canada, we have a very balanced cabin interior, and so we actually cater to multiple types of customers in any given aircraft. I think range for Air Canada is also something that we're looking for, not so much inside the cabin, but even extending our ability to point-to-point destinations.
But at the end of the cabin, my understanding is that you will have less space. It's going to be more affordable for certain people in the middle.
Correct.
Maybe a little bit more expensive. You have more room legs.
Correct.
So that's going to change, right?
No, I'd say that the future is going to be having a product for all customers, and obviously we'll segregate the cabin appropriately. So if you want to have the best travel experience, you'll be flying in the front of the cabin. But our premium economy seating is fantastic. In-flight services as well, entertainment systems. I think those will be great experiences. And there will be also basic fares for those that need more value proposition. And I think that for Air Canada, that's our market. It's a very balanced market.
Great. You've kind of touched it, but what are the most pressing challenges right now? You've had a flight attendant situation, a strike this year. Are labor costs a big issue for you right now?
Well, I'd say that we were eyes wide open. In December of 2024, we laid out an Investor Day, a plan for the airline for 2030, and in doing so, we talked about the impact of lagging inflation. So the world has gone through some significant inflation in 21, 22, into the early parts of 23. We had long-term agreements, 10-year deals with a lot of our labor force. Those were 2015, expiring 24, 25, and we're working through them. So I think that we're very realistic about the cost and the inflationary pressures. We have three areas that are probably the most pronounced challenges. Number one, the step change towards labor, which we're going through, and I think we've understood well the implications of that in our cost structure. Two is in Canada, significant important investments need to be made in airports, and there are billions and billions of dollars, probably upward of $20 billion in the major hubs in Canada investments. That will come back to our cost structure, but it is a benefit, and we are a global carrier. We depend on our global hubs in Canada to connect passengers around the world. And so those investments are well appreciated. They will have a cost implication. And then the maintenance cycle of aircraft and the pressure on that. Now, I'll be brief on, we also have a very clear margin expansion plan. In that same Investor Day, we talked about 15% margins going to about 18% from an EBITDA point of view. And in very simple terms, we are in an expansionary cycle. We're growing. We produced about 105 billion ASMs this year, roughly. We'll grow to about 130 billion ASMs in terms of overall capacity by 2028, 2030. And in doing so, an airline does absorb costs better. Two, there is significant opportunity for productivity in the overall workforce as we continue to introduce tools, technology. We have about $1.5 billion of technology spend over the next 3 to 5 years. And finally, we're going to be bringing in almost 90 new aircraft, a variety of different aircraft. And those aircraft are the best-in-class modern aircraft. They will bring 15 to 20% cost reduction from operations, fuel burn, as well as maintenance, and just overall operating costs. And with all of that, that does actually bring margin expansion even in a tougher cost environment.
The airline industry, it's a cyclical industry. Where are you in the cycle right now, and how do you navigate through the cycles?
Yeah, that's a great question. I think that, and a lot of credit goes to my predecessor and the team that was there as we entered the pandemic, right? We had a one-time leverage balance sheet. So one of the ways that you manage this business well is you keep a strong balance sheet and you allow for flexibility when recovery comes. And we have been in a, I call it a latent recovery, but we are now in the full cycle of bringing on new aircraft. We retired, I think, almost 80 aircraft during the pandemic, wide bodies and narrow bodies alike. And so we're modernizing our fleet over the next 5 years. We've taken, the entire impact of the pandemic and come back in 2024 back to about one-time leverage. So one-time leverage, a clear structural growth plan that is really levered around Canadian travel and international, the international network that we serve, and we can talk more about that, and investments in aircraft, and yet keeping a balance sheet of about 2 turns or less of leverage. So strong balance sheet, agile, redeploy aircraft where we have moving factories in the end, right? So when it's not working in one part of the world, we can move that factory to another part of the world. And we do so, I'd say, better than most. And we've shown that even with this latest transborder challenge that was on us in 2025, repositioning aircraft and being agile. So I think strength comes in agility and a strong balance sheet.
WestJet made a firm order of 67 aircraft in the past few weeks. Does that change anything for you in terms of planning, just to keep yourself competitive?
Yeah. Again, we always assume and model competitive forces when we develop our long-term strategy. We have a very clear strategy to grow to about 30 billion in revenue. We're about 22.5 billion now. We feel confident that the strategy we picked really relies on factors that are included in a competitive landscape, such as WestJet. With respect to our own fleet plans, we are bringing value to leisure travelers. In a sense, that's where their narrow bodies probably will go. And we ourselves have a plan to have an all 737 very efficient fleet for leisure travel. So our Rouge brand is going through a transition into an all Boeing fleet from a variety of aircraft. That'll give us standardization. But I think, it's a competitive world and airlines have always been competitive. I think our structural growth plan does stand on its own.
What are the growth opportunities or the biggest one you're seeing right now that's not already there for you? Or?
Yeah, I think that to be very clear, right? So in terms, just so that kind of gives you a bit of an anchor here, we were at about 113 billion ASMs, available seat miles, in 2019. We completed 2024 at about 104 billion ASMs. We had an old fleet, we retired older aircraft in our fleet. That was part of the reduction of capacity. We're going to go from that 104 to about 130 billion. That's about 4 to 5% capacity, passenger traffic growth over the next 5 years. And the way we're going to do it is really structural. Number one, GDP has grown and will continue to grow, even if it's modest, 1.5%, 2% a year. So we're not expecting or we're not planning on excessive GDP growth. Two, the Canadian demographic has changed dramatically in the last 15 years. And Canada is now over 40 million people. A lot of immigration coming from Southeast Asia, from India, from North Africa, the Middle East, perfectly suited to our international network. So we're growing into those markets. Those markets are growing 8, 10, 12% per year, year over year within our franchise. So they grow at 2 to 3 times GDP alone. And then the third important element is that we have a gift in Canada. We have a geographic gift. We are the shortest route from Vancouver, trans-Pacific. We're also the shortest route transatlantic from Montreal. And we have a global hub in Toronto. That connecting capability allows us to bring what we call Sixth Freedom traffic. So either American travelers going through one of our hubs into Europe with the fastest connections in many cases, Europeans going into the Caribbean, for example, flowing the other way. So that growth itself also offers Air Canada an expansion of its international capabilities. And we're building the fleet to do those things.
You talked about the GDP, about the economy. What are the direct or indirect impacts stemming from the U.S. tariffs on Air Canada?
Well, I think like everybody else, we're working through it in lifetime. So that's, when you look at a direct impact in the spring of this year, there has been a reduction of transborder travel, specifically point to point, probably in the low to mid-teens. That's been fairly stable. I think we're past the variability of that now.
The leisure travel mainly, right?
Yes, the leisure travel. What we're seeing, to be honest, right now is increases in corporate travel, including U.S. transborder. And I think that Canada itself should and can leverage Air Canada and its ability to connect it globally. We fly to over 200 destinations around the world. We have an incredible global network. And I think, we can be and will be a catalyst in helping the Canadian economy expand and diversify, but also to keep that connection to the U.S. and continue to be the largest transborder airline in the world anywhere, obviously U.S., Canada. So I think we play a role. We're going to invest probably $20 billion between 2024 and 2028 in the airline. And some of that is obviously half of that is in aircraft. I think we can be a catalyst for the Canadian economy and for Canadian trade.
Great. Just want to quickly touch on the flight attendant situation. So it's in arbitration right now.
Correct.
Your latest offer was a 40% increase in overall compensation.
Yes.
There was a $375 million loss there because of the strike. So what's the impact on your financials down the line because of this situation?
Yeah, great question. So one, we issued a press release, must be now a week or two ago, really just clarifying the entire impact of the work stoppage. That was roughly close to 5 days of operations that were shut down. $375 million, that's the implication of it for 2025. As you said, most of the agreement is now confirmed and locked. There is an arbitration process for wages. We expect that to go through the proper process over the next couple of months. As we look longer term, I think we've been realistic about our assumptions for these cost adjustments. And so whether it be pilots last year, we renegotiated successfully a 10-year deal expiry. We will get through this with the flight attendants. We have mechanics coming next year. Across the board, I think we have been realistic about the expectations of adjusting costs for wages. And we are focused on productivity, improving the airline overall, and offsetting some of that cost pressure. And then when you have a modern fleet, larger aircraft, larger airline, there is a scale and productivity benefit that will help us absorb all of that. And technology will bring productivity as well.
All right. John D. Bert, thank you so much.
Thank you. Merci, Mathiew. Thank you.